Now, this is the panel discussion on Fintech and BFSI sector collaboration. I want to call on stage Ms. Neha Punater. I request her to come on stage, Vice President and Global Leader, BTS Practice at Capgemini. You heard Neha yesterday. Along with her panelists, Mr. Chinmay Pol, Head Banking Alliance, NPCI Bharat BillPay. Welcome, Chinmay. I'm informed that Mr. Jitendra Mahapatra could not make it due to some emergency. Mr. Prahlad Giri, Deputy Director, Economic Research Department, Nepal Rastra Bank, Central Bank of Nepal. Do we have Mr. Prahlad Giri here, please? On stage? Okay. Mr. Nitin Bhatnagar, Regional Director, India and South Asia, PCI Security Standards Council. Welcome, Mr. Bhatnagar. And Mr. Vaibhav Joshi, Digital Banking and Fintech Consultant. Welcome, Mr. Joshi. Mr. Prahlad Giri, welcome on stage. Namaskar and welcome on stage. So all over to you, Neha.
Thank you. Okay. Good afternoon, everyone. And I know we are just before the lunch hour, so we'll try and make it short and interesting at the same time. So our panel discussion is on the collaboration between banks, insurance companies, and fintech. And it is a topic close to my heart. I had the privilege of launching the first fintech report along with NASSCOM in India, and that was in June 2016. I think 8 years on, we had projected that the industry would grow at a rate of about 20% year on year. We've definitely surpassed all the projections that we had made in that report, and for once I'm happy to be wrong, because I know that the growth that we have seen in this sector has been phenomenal. And I was just chatting with my panelists in terms of, especially in the payment space, what we have achieved is kind of, truly stellar, and I proudly talk about it wherever and whichever forum I'm given in about what India has achieved. On that note, I'll probably, Chinmay, turn to you first. In terms of Bharat BillPay, again, another product from the NPCI stable, which has been truly unique and remarkable. So what's really been the journey? And you have played a big role in actually fostering the collaboration between different participants in the ecosystem. So how's really been the journey for you?
Okay. I hope I'm audible at the back. Good afternoon, everyone. And thanks, Neha.
You may have to be a little
louder. Louder?
Yeah.
Am I audible at the back? Right. Thanks. Okay. As Neha was mentioning, I represent Bharat BillPay. We are a part of NPCI. Prior to this, I'll just move to a normal step wherein all of us are consumers. A consumer requires certain services like electricity, like utility, like LPG, gas, mobile bills, etc. Right now, these services are provided by certain service provider. Whenever a consumer consumes these services, the service provider, or we call biller, would generate a bill against which a consumer has to make a payment. While making those payments, a consumer is looking for certain set of conveniences. Now, those conveniences can be ease of making a payment, choosing interoperable mechanism, choosing a payment mode of his choice or her choice, getting a payment acknowledgement on a real time. So that's what a consumer is looking for. On another hand, the biller, who is the bill generator or the service provider, is looking for a low-cost collection mechanism so that he very effectively collects that bill payment from the end user. Also, he is looking for a smooth settlement and reconciliation procedure for every bill which is generated. Now, to resolve this in a value chain, with this thought, Bharat BillPay was created. The organization went live in October 2017. In December 20, we realized that there has to be a dedicated focus because there is a much larger universe which has to be addressed much more use cases which we can resolve. So in December 20, NBBL was created, NPCI's Bharat BillPay Limited, as a subsidiary of NPCI and a separate entity. From there till now, we have just completed 3 years since the company has been created. And these 3 years, we have been clogging more than 1 billion transactions a year. We are present across 26 categories and have all the fintechs and banks participating into this. Now, taking a step back here, to bring a consumer and a biller together, we create an ecosystem which is bought by a fintech and a bank together. So, for example, a consumer goes to a PSP or a fintech app, finds out his bill. The bill via biller is provided by a bank in the ecosystem. The consumer makes that payment and the acknowledgement is given back. So in our system, this collaboration between fintech and a bank is extremely important for end user benefit as well as for the service provider. Now, these product categories in which we are present and we serve, this require continuous evolution, continuous betterment, adding new product categories into the foray. To facilitate that, we regularly conduct something called a steercom meeting and a task force meeting, wherein all these ecosystem players come together. They share a lot of insights with respect to their businesses, with respect to challenges they face, and the problems which we can solve. Bringing all that together, we come out with new product categories and evolve into existing set of categories. So collaboration is the core which we actually capitalize upon to serve the customer.
Thank you. Thank you, Chinmay. I would probably now turn over to you, Mr. Prahlad. As you see, India has made a lot of effort in setting up these common, I would say, financial services infrastructure, which can help consumers as well as the banking ecosystem. How do you see this in Nepal from, the regulator point of view? And what are you all doing to really foster the kind of, the industry and fintech collaboration? I mean, what are some of the guidelines, regulations, either you've already launched or you are planning to launch to help that?
Thank you, Neha, and thanks IBEX for giving me this opportunity to speak something on behalf of Nepal's domain in the fintech collaboration. Really, it's quite good here. I am primarily involved in economic policy research. Policy research we do before bringing any policy or regulation, any kind of new system in the financial landscape. So in terms of talking about the collaboration with the fintech companies and banks, we have also, incentivized banks and financial institutions, our fintech companies as well, licensed entities from the central bank. But the thing is, there are collaboration, but there has to be something to be taken into consideration from the, what we say, demand side. That's called the consumer's end. So basically, we do have very big concern on the people at first kind of things being a public authority. That's why we give emphasis to how the public, how the end users are taking the new advancements, the convenience of the product at a large, or the services being provided by the financial institutions at a large. So we focus primarily on their priorities. So having said that, we do have some initiatives to allure the collaboration between fintechs and banks and financial institutions. In Nepal, we still have a nascent technologies, not so much advanced or developed. So we're still looking after the good examples of India progressing in Nepal. So we are closely watching it being a very quite close neighbor. But the thing is that there are three concerns I've noted. First of all, infrastructure readiness is to be there, network connectivity, and collaboration in terms of what? First and foremost, the central bank or any regulatory authority does not want to bring any kind of directive or any kind of policy circulars unless that is adaptive by the demand side, what to say, the communities that is targeted for. That's why we need to be quite cautious on that part. So collaboration is very essential in terms of what the gentleman was saying earlier regarding the Bharat BillPay. Really, there is a collaborating means bridging the gaps of the resources or the something you can say the capacity building as well to imbibe those things to put in place. So collaboration, we have several frameworks. I'll discuss it later on, but we're still in the nascent stage. Our fintech domain is heavily lopsided. That means, having said that, we're still yet to harness the big potential of lending and the investment into our fintech landscape. So I'm here nothing to say more than that, but it's very happy to, share some insights. Thank you.
Thank you. Thank you, Mr. Prahlad. Nitin, coming to you. Yesterday we heard in few panel discussions on how security is topmost in everybody's mind as we go digital, both whether it's, large organizations or for the smaller fintechs. So given that that's really paramount, how do you see the role of, your organization in educating, building awareness, and in some ways helping in the compliance as well?
Yeah, thank you, Neha. I think, see, the data security is a very critical aspect, and I think, and it's all revolve around the trust, right? And I think we talked about the collaboration, and I think collaboration also plays a very equal role when it comes to the data security and securing your payment infrastructure. Now, the forms of payments have grown drastically, just not in India, or it's globally, the scenarios are changing. Yes, India as a country has grown in digital payments, both in volume and value, which is great. And I think data security, again, plays a very important role. Now, what we as PCI Security Standard Council does, PCI is largely been formed by 5 payment networks, largely Visa, MasterCard, Amex, JCB, Discover. NPCI here is playing a role of an affiliate membership with the PCI Security Standard Council, where they get involved in evolving these standards, providing us feedback, being part of various working groups where they can influence these standards based on what are the different scenarios, probably from both business and technological aspects, are required to take into consideration to evolve our standards. Now, PCI Security Standard Council, again, is a body which is focused on creating a lot of education awareness, just not specifically to any specific sector, but I think when we are here for the fintech and the BFSI sector, yes, definitely there are content that could be used to educate within the organizations and use for your internal consumption to understand what new data security standards that are coming and the standards that we are having in existence. So today we have close to 15 data security standards that is catering to the entire payment ecosystem. So we call actors, I was telling Neha that we call them as actors. Everyone in the e-payment ecosystem for me is an actor, whether it's a issuer bank, it's a merchant, a vendor, or service provider. Anyone who is taking part in this payment ecosystem is an actor for me. And every actor, not necessarily required to follow all the 15 data security standards. Definitely, depending on what kind of infrastructure that you have, what kind of applications that you have, what kind of softwares that you have, you may need to pick and choose on the standards that are required to be adopted to protect the payment infrastructure. Now, the compliances to these standards is something is not managed by the PCI Security Standards Council. What we do is that we develop these standards, we maintain these standards, we make sure the industry stakeholders, which in this case probably the BFSI and the fintech sector, are aware of these standards, and also the compliances to these standards being driven by the payment network. So they are the one who drive compliances to these standards. They have specific compliance programs around these standards. Now, there is another angle to it, is that we don't again come and do the audits. PCI Security Standard Council is just focused on developing the standards. who does this audits for you is the qualified security assessors. So qualified security assessors are been authorized by the PCI Security Standard Council. They are trained by PCI Security Standard Council to do the audits on these standards. Now, one thing I just wanted to clarify to all the stakeholders here is that there is something called certification, which presumably people think that there's something called PCI certification. There is nothing called certification. It's always an annual validation process that you need to complete against the standards of PCI. So there are two official documents. There's probably people come up with the certificate, a piece of paper that says, oh, I'm PCI certified. No, that's not the case. So the PCI certificates are not recognized by the PCI Security Standard Council. The two official documents that are recognized by PCI Security Standard Council are the report on compliance and the attestation of compliance. So these are the only two documents that one should consider while you are evaluating any RFP where you have mentioned, the entity should be compliant to the standards of PCI. Which standards of PCI? You need to get these documents, not the piece of paper which is certificate.
Thank you, Nitin. Vaibhav, coming to you, you have the perspective of being on the other side and having operated in the digital payments space. How was your journey and how did you go about collaborating with the banks and financial institutions? What's been your experience?
Hi everyone. Good afternoon. I hope I'm audible at the back. Thanks, Neha, for that question. And let me take that question from both the perspectives, not just as a fintech, but also as a banker. Because in my previous avatar, I used to lead these initiatives at two banks. See, when it comes to fintech and banking collaborations, there are generally in India, there are two approaches. Okay, so one is what we call the distribution side and one is what we call the technology side. Now, there are very, from a regulatory and compliance point of view, there are prescribed regulations which are there in place. So, erstwhile, when we talk about, payments or lending, then, or even liabilities for that matter, we used to have banking correspondent regulations. What started as, a corporate BC and a BC agent from a distribution perspective, then went on to, having BC and then co-lending in the asset side, and then probably something like a DSA. If you look at the new age side, and let me touch upon lending and I'll go on to payment, because payment, I think most of you, we have all been doing it for donkey years, for the past, decade plus, since the launch of, IMPS, subsequently UPI and so on and so forth. So the erstwhile BC and DSA is the new LSP and DLA. Okay, if you look at so I'm trying to draw an analogy over here, and that is how the collaborations happen today. Now, coming from a payments perspective, we have really evolved as a country. When a fintech goes to collaborate with a bank, generally what a fintech wants to do is, it wants to take a bank's product and, use its agile distribution reach and render that product from the distribution perspective, unless you are an enabler fintech like a Perfuops or a Karza who wants to actually give their product to the bank, or a tech infra provider like M2P who wants to again give their product to the bank. But most of the distribution fintechs want to take the product, plug it into their stack via APIs that the bank would provide, engage through a model where, it can be an engagement of a technology service provider plus BC from distribution perspective, TSP for the tech. So it's a combination of a TSP plus BC, possibly also as a program manager. From a bank to bank perspective, it changes. Generally, there are internal nodes that are created at program level for engagement with fintechs. And, once those nodes are approved, then every program gets approved by a ManCom committee level kind of an entity. Again, these programs are audited every quarter. The program reportings have to be done to RBI. From a fintech perspective, what happens is a lot of these products have become cookie cutter products. Okay, it's very interesting. UPI, for instance, has become a cookie cutter product, but only the UPI API part, not the UPI TPAP part. If you look at UPI TPAP part, okay, what I mean by TPAP is when we use a Google Pay or a Phone Pay, then it's a TPAP, the type of deeper UPI you have. But a UPI API is just an API call that you use to render a certain thing, which generally you see in a payment gateway kind of a scenario. So there, again, the compliances keep on varying and the engagement also varies. again, from a fintech perspective, generally the idea, Neha, is that, the more the distribution, the better. So fintechs, as a fintech, so in my previous avatar as EasyPay co-founder, what our focus was to, onboard as many MSMEs as we could, give them the simplest journey as possible for onboarding, give them maximum products that could give, and then, make revenue of each product, okay, like a one-stop shop kind of a thing. Same is the case with a consumer, fintech, like a Jupiter or a NeoX or a Credit, and so on. From a bank's perspective, again, and maybe 10 more seconds on this and I'll hand it over to you. From a bank's perspective, banks generally are averse to tying up with a lot of fintechs. So they pick and choose, because whenever they tie up with a fintech from a distribution perspective, it brings in a lot of regulatory compliances and governance and risks to go with that the banks have to monitor.
Thank you, Vaibhav. An interesting perspective about, collaboration, working on the distribution side and then on the technology side and how the models differ. Great, thank you for that. Chinmay, coming back to you, you spoke about how after Bharat BillPay was set up as a separate entity, and then, how you have seen, the collaboration work in the last 3 years. What's really the next step in the growth that you see for Bharat BillPay in terms of the collaborations? How are you building on that?
So I'll just take a clue from what Vaibhav just said. Fintechs are actually using a bank's product and giving a distribution arm to it. Let's put it to a practical example. Let's say, what does a fintech brings on board? It offers a low cost of distribution network, a much advanced technology, and reach to the end user, especially the underbanked and unbanked population, so to say. While on the other side, a bank offers a lot of trust to the end user, very stickiness at the customer end. Customers have long-term relationship with the bank. And of course, again, what Vaibhav said, understanding of the regulatory requirements, because this entire piece is regulated. So understanding that framework requires certain level of expertise which a bank brings on board. Recently, we created one of the solutioning across lending. So most of us have come across those digital lenders. The underwriting has come to a different level wherein, all the behavioral parts are also considered, and there are all AI-based understanding which are into play. So the way a loan today is lent out is much faster than how it was done maybe 10 years back. Now in minutes you get a loan, and it reaches right to the tier 3, tier 4 city consumers. So let's say there is a shopkeeper who is based out of a tier 3 city in a smaller state of India. He takes a loan from a digital lender. Obviously, that lender is backed by one of the bank or NBFC from a product and a co-lending point of view. Now, this person, because he's a shopkeeper, every day he earns money. And that's more into cash. Now, he would be very easily paying back the EMIs if he gets a cash-based solutioning. And that cash-based solutioning, if that can be done on a daily basis, it would be icing over the cake for this guy, because every day he'll earn some part of it, he can pay it back to the lender, right? But that requires a lot of footwork in the field. While there are certain companies who offer that kind of a solutioning, there is a challenge of carrying that cash towards end of the day. Because practically when an agent goes in the field to these kind of people who have taken loan on a regular basis, maybe once in a day or once in a week time, towards end of the day, he reaches with a lot of cash in his hand, and by then the banking hours are not there, right? Plus, there is a consistent requirement of reconciling the money which has come, so that that entire process is closed on real-time basis. We have created a solutioning called agent collection model, wherein we have partnered with these companies who provide this agent collection. On a real-time basis, they collect the money and reconcile in the system which is powered by Bharat BillPay. And again, that money is deposited to their center, which works slightly beyond the banking hours. So the risk of carrying cash is eliminated. We have recently done 2 of the pilots with 2 of the NBFCs here, and we have got fantastic result. The reach has gone to depth of India, tier 3, even tier 4 cities. And we plan to scale it up in the next financial year to bring financial inclusion right till the person on the road.
Thank you. That's fantastic. And it amazes, how we continuously innovate products which are more tailored to the Indian needs. And as you said, really focusing on financial inclusion. And as I was telling Chinmay, probably we need to market this a bit more because we don't talk about all the fantastic work that we do in India. Coming back to you, Mr. Prahlad, you mentioned about in Nepal, probably payments is where you have seen a lot of action compared to lending and investment. How are you seeing that market panning out? And as a regulator, you think you all have done enough? Do you need to do more? Because payments is probably something which is more ubiquitous and everybody gets it.
Yeah, thank you. As I said earlier, that payments have heavily dominated the fintech landscape in Nepal. We are yet to harness the potential of investment and lending, but these are very much in priority these days. In our recent study, we have gone through very massively to assess this, current situation of the mid MSMEs and those been defined by the World Bank, missing middle. The mid MSME segment, which are the missing middle, even they don't have the basic, capacity for the requirements to be fulfilled by the banks and financial institutions for the credit onboarding and something like that. And Nepal's, credit ecosystem is heavily been subjected to the collateral, mortgage-based, and so. In that case, we are more focusing right now to bring the policy on onboarding the lending as well as the investment side. So regarding collaboration, I would like to give you an example in Nepal where some of the fintech firms are doing very good collaboration with the banks in terms of, getting customer identified. That said, KYC still not being centralized, but though they are helping the avenues to really convenient for the convenience of the customers. That would be a very easy to follow and less costly on that part. But in our case, still a large chunk of the population is still far from the finance and, being included. So the foremost objective for us to foster the innovation with the collaboration with the emerging technology provider or solutions, fintech is called, for the largely as a financial inclusion, one of the way. And basically we see still the people are not much literate enough. How do they respond the collaborative way? How do they respond to the newly emerged technologies and adaptive way? So we have a regular industry dialogue, regular end-to-end dialogue with the consumer cell also for the consumer protection and literacy itself. One more thing I'd like to focus here is to more emphasis on the security side. For instance, Nitin just said security as a whole is a paramount, priority for any kind of emerging technologies. So collaboration has to have the focused way and thematic programs on security side. That would say. Okay, thank you.
Thank you. Nitin.
One thing I would like to just counter on this gentleman's comment. How the collaboration, the way, the process, is it a standalone supportive to the banks or being a part of the process of the delivering the service? For instance, you said that a whole services to be outsourced through a fintech company. Is that called as the collaboration or the part of the process or something?
It can be both ways. So generally what happens is, depending on the requirement of the financial institution, in part or in totality, a particular service can be outsourced. Now, here in India, we have something known as overall outsourcing guidelines. That outsourcing guidelines has certain caveats in terms of how you can employ a particular IT company, technology company, or any other outsourcing provider. Okay. Now, when a fintech comes in, so there are two aspects, and what I'm trying to emphasize in using fintech for distribution, which is as against the brick and mortar setup. Do not set up branches, but use fintech to distribute the product, or using fintech for technology. So for example, we have a core banking system, we have a loan origination system, loan management system, we have a payments infrastructure. But building middleware or building enterprise service bus level applications where technologies that are brought in by fintech are leveraged for certain aspects, and then bank renders the product again through its traditional channels, through its omni-channel infrastructure, including fintechs. So both ways.
Thanks, Vaibhav. I'm sure Mr. Prahlad is going to reach out to you much more. Nitin, coming to you. As a role that PCI plays, what would you suggest as some best practices or guidelines for fintechs who are looking at establishing themselves, and more importantly, looking at collaborating with the larger banks and insurance companies? What ought they to do so that, there's higher acceptance for them?
I think it's a very good question. I think the fintechs and the BFSI sector, they have to really differentiate themselves, what kind of collaboration they are looking at, one. And second is involvement. I think the key is, once you get involved with different stakeholders from the industry to understand what are the nuances, what are the challenges, and you're trying to keep your teams updated about what are the new standards, new technologies, what are the new aspects that they need to take into consideration. If that's been discussed, I think one thing is for sure, what has not been discussed today within the fintechs is on the collaboration with the external stakeholders who are working on developing standards like we, right? And secondly, also adoption rate, I would say, is little low in terms of picking up on the standards. Could be several reasons. I don't want to get into the reasons, but I think ideally the important point here is that you have to start looking this as one of your key element when you are talking to the BFSI sector, when fintechs are talking about their solutions, when the fintech is talking about their products. They should also build some kind of a framework that talks about how well they are securing their information, how well they are securing their data. I think we started today in the morning about talking about DPDP Act, and I was a little worried about what is going to come by, how it's going to impact. And if you're not laying the foundation today, and I think the foundation for PCI has always been people, process, and technology, right? And you need to work on all the three aspects. It cannot be just technology which is going to take you to the next level, or just process or the people. It's three combining together will take you to the next level. Education, creating awareness around data security best practices. We have the data security best practices. If I start talking about, we may not be able to cover it in the session, but it's freely available on PCI Security Standards Council website. You have to just go use our resources so that you can take them within your organization and help in protecting the payment infrastructure, right? If you're able to protect the payment infrastructure, the data gets automatically protected, right? And that's what is critical. Awareness, education, getting your team trained on various standards, various best practices that you are seeing in the industry, and then a confidence is going to get built in the BFSI sector, who is trying to coordinate or collaborate with you on different solutions and your products. So mindset change is required here, definitely. Rather than looking at as a cost implication, rather you should look at a long-term planning for how this is going to give you benefits in long run to or sustain your businesses while you grow and your acceptance level gets high. So I think that's more important, that's critical. And if you want to really get involved, you're most welcome to come forward and work with the PCI Security Standard Council. There are various ways that you can get involved with the PCI Security Standard Council. There are, when I started getting engaged, getting engagement from the industry like India, we had 0 stakeholders. Can you just imagine 2018 when I joined, we had 0 stakeholders. We only had 1 affiliate member, which was NPCI. Today we have 40 odd stakeholders who are contributing to the development of standards in addition to NPCI, which is a remarkable achievement, I would say. There's still a long way to go, but the stakeholders, whether it's an insurance sector, whether it's a fintech, whether it's a banking, merchant, service provider, vendor, whoever you can think of, as an, who I call them as an actor, they all are most welcome to come forward and contribute to the development of standards. And also at the same time, you're getting educated, getting aware on what's next for next 5 years or 10 years. So that's very, very critical. And I think that I would sum up with, come forward, engage with us so that you can get benefited out of this entire thing. Thank you.
Yeah, sure.
I'd like to one thing. While talking to the stakeholders, Nitin, why don't we consider consumer forums as also big stakeholder as part of our collaboration, from where we can have more things to come from the consumer forums in terms of
PCI standards are not consumer focused, right? So I don't want to get consumers worried about the standards.
Sorry?
But is it from also the stakeholders, one of the stakeholders is the consumer forum?
No, but I think the security we're talking more from compliance and
other than security.
It will benefit the consumers, but yeah, it has to be basically complied by all the providers in some sense. And congratulations, Nitin. I think having 40 stakeholders in, this time is phenomenal, and I'm sure it's going to add to the robustness of the security standards. So thanks for that. Vaibhav, coming to you, how did in the previous avatar or in previous organization, how did you all go about managing the security requirements and also compliance that's needed, being a regulated industry? Again, what were your learnings and how did you go about it?
Sure, thanks, Neha. So, see, when it comes to any financial product, it boils down to one word, which is trust, T-R-U-S-T. A consumer or a corporate or an entity, for that matter, when they trust you with your money, they really trust your money. They really trust you. That's why they trust you with your money. So whether it's a fintech or whether it's a bank, the regulations and the compliance are very stringent and they're very standard. But I'll give you 3 examples, okay? So, and try to derive an analogy from that. Instead of, let me tell you 3 small stories instead of giving you a lengthy answer. On the 30th of every month, when I was a Yes Banker, so we started digital banking at Yes Bank in 2014. I was there for 2014 to 2020. We launched FreeCharge, PhonePe, BharatPay, when those entities got launched. So probably at that time, 70% of the fintechs worked with us, the entire API banking stack of Yes Bank. So I was part of that team. On 30th of every month, I used to get a call from my RM saying that, sir, FD de do na, target nahi meet ho raha hai. Okay, and I used to be in IFC, 27th floor, and then on the first floor we had our branch. So the RM would come, मैंने बोला ठीक है आ जाओ. RM would come with a form, get my sign, and then कितना target है? 30,000 ठीक है, 1 lakh ठीक है. Okay, so to meet the target. Then what happened is we launched something known as Yes Bot. Okay, the same thing happened. The RM called, said that sir, target meet नहीं है. मैंने बोला come. No form. With the phone, 10 seconds, FD got booked. Okay. Interesting thing, because now I am a Yes Bank. I was a Yes Banker. Assume I was not a Yes Banker at that point in time. I was a customer. The same RM sitting in front of the customer instead of a form. What happens? Trust. Leverage that same experience onto a fintech who does it from day one. Okay, so post that I was with Equitas Small Finance Bank. I was the Chief Digital Officer. So we launched a fintech known as NIYOX, N-I-Y-O-X. We did 1 million customers in 9 months. Okay. A savings account, fully KYC savings account in 120 seconds. It was fintech which was leading it, bank was at the back end. Okay. But look at that trust. The customer would go, download the app, do the steps, and the steps would complete in 120 seconds, that is 2 minutes, and the fully KYC'd account would be ready. Okay. Why? Again, trust. So there we faced a very peculiar challenge, okay, because one of the aspects was the KYC. While we started with Aadhaar OTP-based KYC, video KYC, yeah, ma'am, 5 minutes will be done. So, so video KYC had to be done, and then at that time, video KYC regulations were very, very, very new. In fact, RBI was in discussion with banks at that point in time to understand and frame it. So we came out with something known as on-premises setup, and we had to have the video KYC setup as on-prem. Okay, and I personally wanted that setup to be inside Neo's office from a pure customer experience perspective, because the experience that I was about going to give them from my bank's premises vis-a-vis what I would give them from my fintech partner's premises, extremely different, you know. And, you know, I stopped wearing suits the day I left the bank. You know, I've been in jeans and t-shirt. I wear a coat when these guys, you know, call me to a conference. But that's the experience I wanted my customers also to get, you know, from my fintech partner. So one idea that we floated, we did not execute it, of course, because of certain regulatory things, was to set up a small premise for the bank within my fintech partner's office, okay, which was subleased to us. Rather than we made it the other way around, inside the bank premises, we got those guys on our payroll. But idea is also about experience, how you marry the two, okay. Third experience, and since we have some more time, third experience, so we had launched something known as fixed deposits on Google Pay. 2021, just, you know, search it, FD on Google Pay, that was my product. RBI came extremely heavily on it, because you could book a fixed deposit on Google Pay without the need to have a bank account with our bank. Because it was a UPI debit that would do to your fully KYC'd bank account. Super perfectly done. On the process, the regulator was extremely happy, okay. There were certain other aspects which I am not at the privilege to discuss, because of which we suspended the program. Again, you know, an innovation which the regulator supported. Now in India, okay, and we have seen lately what has happened to one payments bank. Okay, in India, what happens is our regulator, and because your question is specific to regulations and compliance, Neha, our regulator is not just a regulator, is not just a central bank, but our regulator is an industry player. Our regulator acts as an industry player. Our regulator walks hand in glove with the industry. Okay? Our regulator is at times ahead of the industry. Our regulator is something known as RBI Innovation Hub, which is based out of Bangalore. Okay, my good friend Rajesh Bansal heads it, ex-UIDI. So our regulator, along with entities like NPCI, okay, Chinmay is here from one of its subsidiaries, they are ahead of the market. They create not just the specifications, not just the guidelines, but they take industry along with them, and it's very easy for then industry to, you know, do what they want to do. Even in terms of, you know, whether it's following PCI DSS, let's take his example, okay. If I have to do a card program, it's very clear. As a fintech, I will partner with a bank. I can do a co-branded credit card, co-branded prepaid card, BIN-sponsored prepaid card, a co-branded debit card as well. Okay, standards are set. PCI DSS standards will be followed. The card tokenization is in place. Card hosting will be done at the bank's thing. Simple. There is no changing back. There is no changing that. Regulator has already set it. It's cast in stone.
Thank you. And interesting examples, Vaibhav. And I think the live examples really helped to kind of, you know, impress upon the ways to collaborate, to enhance the experience for the customers, and at the same time ensuring that, you know, the fintech is compliant, and at times maybe has to, if non-compliant, actually work with RBI as well. And fortunately, we do have a regulator who is very, very in tune with, you know, the changes that are needed, and in many cases actually leading the change or leading the innovation. So thank you for such an interesting session. I think different perspectives, and all of you coming from your organization and giving that flavor on how the collaboration can work. So really thank you for your time. We have managed to be in time, so great work, team. And with that, thank you, everyone. And thanks, everybody, for listening. And we'll leave you to your lunch break.
So you have very comfortably addressed the nightmare of organizers to finish on time. Yes, please. You got a question? Okay. So we have minus 35 seconds already. So okay, we have time for just one question, please, because we got to use this room for the changeover for the awards. So there's a lot of work pending. So thank you.
My question is to Nitin, actually. So with the advent of change in the digital landscape and the enhancement that is happening, I think we have moved from PADSS to PCI SSF in order to protect CHD and SCD. So is the conscious decision, and how it will be benefiting? Because we'll go away with PADSS, we'll be in the SSF framework.
Yeah, I think, see, this is what it is. I think the change has come, it's a long back. I think PADSS is retired a long back. In October 2022, the PADSS is retired, and now we have a new standard, which is Software Security Framework, which in fact has been referenced by the Reserve Bank of India also in many of their, I think in the Digital Payment Security Controls document, it's very specifically talked about. See, this is changing. The payment landscape is changing. So you may also see what different new standards are going to come by, because today we are in a pen world. Tomorrow it may be a non-pen world altogether, where you don't see physical cards at all, right? And the evolution, you have to see the evolution. We talked about payment applications. Now it's called softwares. Now it's more of softwares. Everything can be accessible on an internet, right? You just sit on a desktop or a laptop, you can access software, right? This change is very, very, important, which was very important. Way back we envisioned, and I think we are envisioning another next 5 years what new is going to come by. So I think software security framework is going to be the future, which is and it's evolving. There are new, test cases or use cases you can talk about. They are coming in as and when we are talking. So it's evolving, and I think it's going to be the future. I think that's all I can say. And I think industry has adopted it. And I think just to also add, the Reserve Bank of India is the only regulator in the world to reference the software security framework as one of the standards to be used for protecting the payment data on softwares.
Thank you so much, Neha and wonderful panelists on stage. May I request Neha to kindly hand over mementos on behalf of the organizers, please. Thank you for your wonderful presence here. आइए, आप आइए. Come. I'm going to hand over. Come on stage, please. Neha, there's a bag from Capgemini also to me. दीजिए ना, आप दीजिए. No problem. You hand over, one by one. I see the need to thank Neha and her wonderful team at Capgemini to have contributed in such a comprehensive manner for the conference, the content, the jury process, the award selection. So thank you very much.